30-year mortgage. Jason, do you know what a 30-year mortgage is?
I'm guessing a mortgage that takes 30 years to pay off.
Yes, it is. And you know what? It's at 8%.
Oh, geez.
Yes, this is a
That's
mortgage story.
disgusting.
This is a mortgage story for you guys. This is breaking news, insane on what is happening. So
8%'s wild.
the 30-year fixed rate hit 8% for the first time since 2000 as treasury yields soar. So, a lot of stuff happening, but the main point being that it's getting more expensive to own a home in the US.
I think like it's more expensive to borrow large amounts of money.
Yes, it is more expensive to borrow large amounts of money, and then we could have a discussion after I get through these points on that. But I do have a couple of things to say about that. So, yeah, on Wednesday it hit 8%. Yes, those are that we hadn't seen those interest rates or those 30-year fixed rate, those levels since 2000. Applications in turn plunged.
Well,
Yeah, because everyone said we are not going to be
There's
doing.
literally no way.
Yeah,
You might as well just wait and then save money and buy it in cash at that point.
Yes, it is insane on what is happening right now. So let me say this too. So the milestone comes as bond yields soar to levels not seen since 2007. Why does that sound familiar? Why does 2007 sound familiar?
It's because 2007 is the year before 2008.
Yes, it is. It's the year before 2008, and in 2008, housing crash. Yes.
Yeah.
But
that one is a lot different, though. I don't know if that it's a 1-for-1 because that one is based on
that's
those like investment accounts for specifically like really bad or high risk mortgages and stuff. So I don't know if that is a 1-for-1, but I'm like,
it is not a 1-for-1, but I mean it's typically what's
typical signs or like similar signs to that event.
Yes, it is. So and if people don't know what we're talking about, I would recommend.
Hope you know.
Yeah, I would hope you know. But yes, if not, watch The Big Short.
If you know, you know.
If you know, you know. But if not, watch The Big Short. It talks about all of this, and especially why this is so important, and why people could see similarities to what happened in 2008 compared to what potentially could be happening in the near future. But I don't want to be a doomsayer here. I will say that mortgage rates are loosely follow the 10-year treasury, the 10-year U.S. treasury, so it could be some signs. So the thing is, too, I mentioned the applications plunged. So applications fell 7% last week from previous weeks. So it was already high, but I think it was like in the high 7s, but now being 8. People people are like, you know what? I had some wiggle room. Now I have no wiggle room for these applications.
Yeah, I mean, it's definitely leading to a lot of different interesting things that we see in the housing markets, like people being like stuck with homes, like their beginner house is now their forever house because the interest rates were when they bought it were so low, so they're stuck.
Yes, that's true.
And there's a lot of other weird anomalies in terms of like, the mortgage. As we talked in another video that you should check out, we talked about how the mortgage moratorium has ended. So like, there's a lot of
foreclosures are up. Yes. Those. Oh my God, with the higher interest rates, I just thought about that. That's crazy. Yeah, because those people probably bought it at a lower interest rate, and now it's going to shoot up.
Yeah, the other issue is that if you think about it this way, this is for 30-year fixed, but think about the people who have 30-year adjustable.
Yeah, that's...
Like, adjustable mortgages like reflect the rate at the time, and people who have those are not in a good position because it's, for a while, it's been going really well because like, rates have gone down for a long time, but now it's just been ramping up, and now they're seeing their monthly bills
that's
skyrocketing.
That's not good. So also, very last thing on this before we get into like somewhat of a discussion about this. One of the other contributing factors to this is declining build or falling builders permits.
Oh,
So
interesting.
yeah, so like there's less permits that are going to be or less permits that have been seen to build new housing.
For new housing, yes.
Yeah,
Okay.
so it's also another contributing factor on what's
Okay.
happening. So this all comes about as there is a strong workforce, strong retail that's happening, and and inflation is not being curved. So it's
Yeah.
probably gonna. They're saying that this rate could potentially also go up a little higher before it, or it might take a while for it to come down. So 8% might be the new norm, which is not good. I think
No.
who are looking for a house are probably just going to sit tight and probably rent for a while
That's
before
gonna be a
buying a
while.
house.
It's gonna
Yeah.
be a while.
Yeah, before they buy a house, or if not, they're going to buy it in cash at this point. But I have not seen personally, I have not seen house values go down because of
No,
this.
not at all. I don't think the crazy thing is that like house values can stay the same
Hmm.
because there are those people that are willing to still.
Yeah.
And the housing markets are like there's only so many houses, and like even still there are people wanting to buy because it's
Yeah.
like one of those things that they really want. So until there's like a point where there are no people looking for new houses, or like they're unable to buy the houses, I do think like the housing market will stay the same.
Hmm.
And if you think about it this way, that might not be the craziest thing, because if you think about inflation, if housing prices are staying the same but inflation's going up, the value of the house is actually going down.
Yeah.
But in a weird way, because the value or the price of things going up reduces the value of the house, but the house stays the same value, and people couldn't afford it before, and people now definitely can't afford it because the amount of raises people get for income has not gone up per
It's
inflation. So it's like it's a
yeah.
whole like domino effect of like first they could never afford
It's
it originally, and now everything around them, like we were talking before, is now more expensive,
yeah.
which in fact lowers the value of the house because those housing values aren't going up. So
So
yeah.
so it's interesting because the thing that happens with I watched this video by the way, and the guy was talking about now because of the interest rate to get approved for a loan is going to be much harder. It's a lot more
Yeah.
stricter. The amount of money that you need to make and bring in as an income exponentially increases from when it was interest mortgage rates were like at 3%.
Three,
Now it's to
four,
8.
five.
Yeah, now it's at 8. So
People were upset, like, "Oh wow, that's 4%. It's insane.
people were
5%. Oh my goodness, impossible.
yeah, now
Six
at
percent.
yeah, now 8%. Yeah, so the thing is like the amount of money that you need to bring in from your wages now exponentially increases because of the mortgage rate. Now you need to bring in more money to account for those higher payments,
Oh yeah,
more
yeah.
higher mortgage payments that you're going to be doing. And I know we did a video before on this, and it was like every 3% that it increases, it's like an additional like $1,000. I think it's like
Yeah.
1,500. It could be like it could vary a bit, but yeah, it's roughly like you're going to see over 1,000%, or not 1,000. You're going to see $1,000 increase at least from 3% to 8% on your monthly mortgage every
Yes.
month.
Which is pretty insane because people were already having a hard time staying afloat before, and now it's like, okay, I wonder if they're gonna change. That is an interesting thing to think about. I wonder if they're gonna change the percentage of required down payment to
Yeah,
be higher.
I think typically before you
It was
could
like
put
20,
down like
right?
20, yes, was the standard to put down.
Yeah.
A lot of people could put down 10, I think, without getting hit by PMI. I
I
think
feel
that
like
by
it was
doing
higher
some,
than 10.
but people could put 3% down before.
Oh,
Yeah,
really?
they could put
3%?
they
That's
could put 3,
insane.
but then you'd have to pay like
Oh,
PMI.
yeah. Well,
Yeah,
nobody wants to do that.
yeah.
That's-
So yeah, but I think it's typically even having 20% is already really hard to do because that's a lot of money. If you and just to have.
Yeah, I mean, it is a lot of money just sitting around because a lot of times people or like people in investment will say that like, oh, having that much money sitting around doing nothing is not good. So if you're not planning on saving for a house, that having that a large sum of money that's sitting there is not a great thing to do.
Yeah. And you know what? If you like this type of content, make sure to like and subscribe. We put out videos daily. We have a library of over 200 videos. We've talked about this subject before. If you like this subject, I'm pretty sure you could find one of our videos that we've done on this in the past. Yeah.
Yeah, let us know down below whether you think 10% is in the cards. Because we thought it couldn't possibly get higher than 7%.
I
And then
think
bam, 8%.
yeah, I think people are saying like 8.2% or maybe like 8.4%. 10% would be outrageous. But at the same time, how it's going, yeah, people didn't think that we'd hit 8 like 2 years ago where we were at 3%. Yeah.
It's like, there's no way. And then it's like, well,
Yeah.
now we're here.
Now we're here. It's
So
crazy. The affordability, by the way, last thing, the home affordability right now is so insane just to even think about because it's so much that you have to do, how much you have to make, how much with the limited inventory too.
Yeah.
So it's crazy.
There's a lot of factors that are all interplayed and
Working against the regular person.
Yeah. So if you want to get a better picture on this, we have plenty of videos on this subject, and yeah, just check it out.
Yeah. Check out any of our other videos. We have talked about this a little bit in depth in other aspects of it. So yeah, make sure to check those out.